Hello traders, welcome to the weekly outlook and setups volume 285. Iliya here, and in this weekly outlook for the first time I'm gonna try to do something different. We're going to reverse engineer pretty much what happened this week by starting from the lower time frame and then making our way up to the higher time frames, pretty much ending up with the forecast for the incoming week. However, we're also gonna have a little bit more detailed look about what happened this week. So let's see how this one goes, and without further ado, let's get into it. Alright, so of course before we start, let's check out the news calendar because we have a pretty busy week ahead of us. So Monday is a dead day, we don't have any news, so do not expect anything on the Monday because on Tuesday we have CPI. So super important news event. The market usually moves a lot these days on the CPI. And then we have some GBP, some Euro news, some GBP speech right here. Wednesday is also a little bit of a dead day, kind of nothing really important. And then on Thursday we have, look at all this, goddamn, right? So Powell speaking, PPI, retail sales, PPI here, unemployment claims, manufacturing index, absolutely crazy day right there. And of course in the morning GDP for the pound. So it looks like Tuesday and Thursday and even Friday, when we have this news release here on Friday, the market also tends to move a lot, especially if you're trading the futures market. So my plan is pretty much focus every single day, right? Especially Tuesday and Thursday are probably going to be the biggest movers this week. Wednesday kind of 50-50. Maybe we get a little bit of a pullback on Wednesday, or maybe like to consolidate before the very big move on Thursday, because again, the news are usually a guideline for when the weekly move is going to happen. So very busy week ahead of us. So without further ado, let's jump into the outlook. There are so many prop firms out there, but the one I prefer is FundedNext. First off, they have multiple plans, but my favorite is the Stellar plan because you actually get paid to pass your challenge, which is a huge incentive to treat it professionally. They offer a 95% profit split and payouts hit your bank account in under 24 hours, or else you get paid $1,000. FundedNext offers competitive profit targets and crazy affordable pricing. Like for just $32, you can control $5,000 account on their Stellar Lite plan. It's crazy value, and they accept all payment methods: credit card, PayPal, even crypto. FundedNext is well established in the UAE with a strong reputation, rated 4.6 on Trustpilot with over 27k reviews. I trade with them, my community trades with them, and we love them. Now it's your turn. Use the link in the description plus code FANATICFN for 120% refund when you pass your challenge. Before we get started, make sure to join my free school community. It's an absolutely incredible, positive community with a lot of value from everybody, and the classroom here is a full course that I've never shared anywhere, so make sure to join. It's the first link in the description. Alright, here we go with the DXY as usual. First now, as I told you, I would like to, for example, start right now from the forward time frame, and I keep my previous outlook. But before I really get into this kind of type of analysis, let me know, of course, at the end if you like it. I just want to first stress on something extremely important, is that us as traders, we never know with certainty where the market is going to go next and how exactly it is going to develop. Okay, for example, here I said, let's say like the market is going to come back into that weekly imbalance, but we have no idea how it's going to come in. Like, is it going to push all the way down and then back up? Is it going to push down and then go up? Is it immediately going to go up, right? We do not know. And this is why, again, the biggest skill for traders is to pretty much learn how to flow with the markets on a day-by-day basis, even on a session-by-session basis, because it's price action that is literally going to tell you what is going on. So as you can see, I'm gonna keep my previous kind of forecasts and see how they develop. So my first forecast was, of course, because we're moving from that daily bullish imbalance on the DXY, for it to straight on go higher and take out the liquidity above this high, for example. But of course, the market ended up with my bearish scenario, but again, not amazing. We had a very choppy Monday, choppy Tuesday, until kind of towards the end of Wednesday, we finally broke below this level, okay? And what I wanted to see is a break and retest of that level and the market truly holding. And again, the market broke it, but I trade imbalances, right? So was there any imbalance right here for the market to pull back into, retest, and then continue lower? No, right? And then the market pulls back. There is one right here, right? But that really wasn't tapped. And when this actually got tapped, look at what is happening right here. The order flow is starting to shift. We're starting to get the structure break here. We're starting to get the bullish imbalance. Then the market tapped in, following through another volatile imbalance, tapped in, and then following through towards the liquidity. So do you see how, for example, I did expect that the market is going to go into that weekly imbalance. However, it formed in a very different way. Okay, so there it is. So the market tried to show us that it wants to go lower, but failed to follow through. It created this market structure shift formation here. It printed the volatile bullish imbalances, and then we pretty much attacked the liquidity. So this kind of started happening around Thursday, right? So Thursday was the only good trading day this week. And yeah, the rest was kind of a little bit choppy. So right now I'm going to delete everything. So this is pretty much what happened this week and how we could tackle it. And then of course I'm gonna keep my drawings here. So we have the monthly imbalance here. We're still taking that monthly liquidity on the weekly time frame. Once again, that weekly imbalance, but this one, according to me, is starting to lose its power because we tapped it once and right now we're coming in twice. So again, I'm probably still not going to look to short from that weekly imbalance, because we can see that from the bottom here, we're starting to make higher lows. Okay, and the market is also breaking structure very strongly right here and also leaving a daily bullish imbalance. Okay, so now again, of course, the market can go down. All right, the market can absolutely go down on the DXY. And how would I see this is, of course, flowing with the lower time frames. Now on the volatile time frame, do we have something? We have also this as resistance. So right now the time frames are a little bit mixed up, right? We still kind of have that weekly to the left, daily is bullish. Right now the volatile is a little bit bearish, but it's bearish within a pretty much kind of this very large bullish push. Okay, so multiple things can happen. Again, we can pull back into that volatile, and that volatile can drive us into the daily, and then from the daily we can see if the market is going to respond, right? And then of course start attacking the liquidity. Of course, the market can tap into the daily as well, which is going to be the bearish scenario, react, break the reaction, all right? And then we can start heading for the liquidity levels lower. That is the bearish situation, because again, guys, we do not know what Trump is going to come in and say, and if he's going to dump the dollar or pump the dollar, right? And of course, the third one that I see is the market tapping that volatile, failing it, and then straight on starting to go bullish. Okay, now I would say, so there are my three scenarios. So of course next week I'm going to show up and of course we're going to see how that one played out. But again, from now on, from a Saturday, I cannot say, all right, I'm looking for a tap of that daily and a long, because I have no idea how the market is going to get to that daily, if it's going to come into the daily, if it's not actually going to break the daily, right? We don't know. But currently I do see that the overall buyers are in control. I don't like that we don't have a lot of impulsivity, right? A lot of aggression going higher. It still kind of looks like a push and a very corrective pullback, which is why I would still kind of reserve my short bias, right? Overall, could definitely start flushing lower on the DXY because it has been very weak, but Trump came in with some positive news recently, so it can start recovering a little bit more. So if you start getting breaks of structure above here with volatile imbalances, I will definitely be interested to long. So that's the DXY. Let's see how it goes. All right, next on the list is EU. So I'm just gonna, again, instead of starting from the monthly, I'm gonna go to the 40 time frame and I'm gonna have a look at my Saturday's outlook. So again, what did I expect here? But I had the daily bearish imbalance and the daily OB that got tapped on Friday, and then the market pretty much ended here. And I said, well, to me, it looks pretty good for shorts, right? This liquidity is a very clear level. We don't have anything to stop it, but guess what? The market opens on a Monday and rushes higher, right? And then pushes lower and then comes back higher. So you can see this was an absolute chop right there. Absolute chop again. Could you have taken some stop losses? You could, right? But then literally my community we started shorting from here because we saw, for example, that the market is failing to close above this level, right? And then we started seeing again the volatile break of structure here with an imbalance, tapped in, reacted, and then there was also another short here on Thursday and the market dumped. And where did it go, guys? Towards my overall target. So this is what I was expecting for the market to take out, tap into that weekly imbalance. But again, look at how I expected it to happen, for it to pull back on a Monday and reach it. And what the market ended up doing, it ended up chopping up all the way until Thursday, right? And then it actually fulfilled the liquidity. Okay, so kind of again, I can say right now, hey, my forecast was right. But again, guys, like, I can tell you I'm targeting that weekly, but I have absolutely no idea how the market is going to go to that weekly. And this is of course part of flowing with the markets every single day. Now the market is tapping into that weekly imbalance. And why is it looking like this? Did they change the candles again, these bastard brokers? Yeah, so now the imbalance is looking a little bit bigger. We're tapping into it. Okay, so then of course we have to check out on the daily time frame. Do we have any daily bearish imbalances right now? Not really. We invalidated one on a Friday. So this to me is a bullish sign, invalidation of a bearish imbalance, because here from the top, we had bearish here and we had bearish here, and we can see we've been making lower lows and lower highs. So again, currently we are going to be in a very tricky kind of transition area if the market decides to actually go higher. So currently, because there is nothing bearish on the daily, we really have to observe the 4-hourly time frame. And the 4-hourly time frame had that large 4-hourly imbalance here, tapped in, took the liquidity, and then it actually flipped a little bit bullish, okay? But what I want to say right here is that it's still a little bit too early. Like if you have a look at what's been happening, we have been absolutely selling off, right? So this can just be another lower high for the market to drop lower if the DXY decides to pick up on some strength, okay? Which is kind of what is happening. So I wouldn't really say that I'm looking immediately to go long from that 4-hourly zone, but if I'm to go long, I would look for it to hold, print another bullish push, pull back, and then from there start looking for the longs when the market actually confirms to me that it wants to go higher, okay? Because currently, again, if we zoom out, we've been making lower highs and lower lows on the daily. The 4-hourly time frame has been pretty choppy, kind of making these kind of correction moves here, right? And then selling off, and then correction, then selling off. So what if this is another correction and then it sells off, right? We don't know yet. However, right now we have that weekly imbalance, which is a higher time frame zone. And if I really start seeing the shift from that higher time frame zone, then of course we can start targeting the liquidity levels to the left, and that is going to be the first one. Okay, so this is my outlook on EU, right? I kind of have a little bit more of a long bias, which doesn't really align with the long bias that I have on the DXY. So of course I can give another potential scenario is that the market breaks that 4-hourly zone, pulls back, and then continues to flush. Okay, but then you're going to be like, hey, Iliya, well, you're literally giving us the two possible scenarios, right? It can go up or it can go down. Well, that's trading, right? I don't know if it's going to go up or down. I just don't, right? And if somebody tries way too hard to know where the market's going to go, he's going to be stuck in an eternal loop of trying to figure it out instead of just showing up and literally listening to the market about telling you where it's going to go. Okay, so that's EU. Let's see how it goes. All right, let's check out GU again, straight to the 4-hourly time frame to have a look at my overall expectations. So again, here we had a daily imbalance above us, okay? But we were getting so close to that weekly, so you can see what I have probably said here. Well, I would probably expect that the market rushes very quickly to that weekly, and then from there starts giving us the longs. And you can see I was fully wrong here, right? Because while the market ended up doing, it ended up chopping and chopping and chopping Monday, chopping on Tuesday, and then it rushed into that daily imbalance, right? So after we rushed into that daily imbalance, we are coming in here with a 4-hourly bullish. So this is where we get that transition area. The market taps into the 4-hourly time frame, reacts, and then breaks it. Okay, so then after it breaks it, this is where we started looking for shorts. But somehow I took a stop loss on a short on GU this week. It was absolutely unlucky short, right? But still, you can see the market kind of went from a little bit bullish push on the 4-hourly, tapped in, showed us that the sellers are starting to take control, and then we started unlocking this as liquidity. And then of course the next liquidity point was the weekly imbalance, which is what ended up achieving at the end. Okay, so you can see again, I could have said, well, I was right, the market reached the weekly, but I was not, because again, the market first went up and then it had a period of alignment, and then pretty much the shorts should have been taken within this area here on the 4-hourly time frame. So currently again, so this is where I kind of feel like this is a little bit more valuable for me to show you how the market actually developed and how I would have tackled it, right? So you can actually learn a bit more on how to flow with the markets. Right now we're tapping into that weekly imbalance, and this daily imbalance is already taken, and we're not making a new daily bearish imbalance, which to me is a pretty bullish sign, right? We're coming in from that crazy liquidity here, but we've already pulled back into the weekly, and you can see Friday, a very nice candle, and we can already see the 4-hourly time frame here. It looks pretty strong, right? It's showing us that a lot of buyers entered from that weekly imbalance, right? And I was actually telling my team, because there was kind of a little bit of a short here, right? In my morning analysis on Friday, I told my team, well, guys, we are looking very bearish right now on the 4-hourly time frame, but we're tapping into that weekly, and we took an absolutely massive liquidity here. So don't look for the shorts. And we can see the market just not only disrespected the short, but it actually created 3 4-hourly bullish imbalances. So looking at this one, it really gives me some very nice long potential feelings, right? So if we manage to pull back into any of these imbalances, but then what I really want to see, guys, is again, show me that you actually want to go higher. Pull back, make a higher low, break structure, make a new imbalance right here, and then I'm gonna start looking for the longs all the way these smaller highs here, and then of course ultimately that weekly high here. Okay, so that is GU, right? I can kind of be a little bit more one-sided on GU because I really like the weekly top. I really like that very recent bullish introduction. So if we actually happen to pull back into any of these levels, you can even already start potentially expecting the longs. But again, if you want the highest probability trade, wait for the market to actually show that it wants to go higher. Wait for it. So for example, wait for something like this, right? If you're looking for shorts, don't try to short right there at the top, right? Wait for the market to show that it actually wants to go short, break structure, imbalance, pull back, there's your short. Okay, so don't try to go long right there while the market is still in the bearish market, pull back, higher high, bullish trend, then you're gonna get the trade. All right, so that's GU. I would say I'm a bit more bullish on that one, so let's see how it goes. I'm just gonna give one scenario here. Aussie dollar, let's check it out. We still have that weekly imbalance, but let us transfer onto the forward time frame. And yeah, look at this one. So this one I actually kind of told you that it looks pretty good. We're having the market breaking that very old structure. We're having a forward imbalance aligning with that structure. And look at that, the market just pulled back, right? The first thing that it did on Monday is tap into that imbalance and boom, follow through. Okay, and you can see I was just expecting in this case that liquidity to be taken because again, guys, afterwards, I have no idea what it's gonna do, right? Every single day, I'm focusing pretty much on low-hanging fruits. Just waiting for something easy to happen, target the very recent liquidity, and then I allow the market to show me what it wants to do again. So there it is. Pulls back, takes the liquidity. And then afterwards, okay, so there is the bearish scenario, pretty much invalidating that forward imbalance and then starting to head bearish, right, towards, for example, this liquidity target, and then eventually the weekly. But this one did not happen. But then look at the overall development, right? So we kind of pushed up and then we pulled back into the imbalances here. We pulled back into the order block. So there was another long right here. All right. And then the market impulses again. It looks like a really nice long bias, but look at what it tapped. It tapped the monthly bearish imbalance here absolutely to the tick. Okay. And then look at the reaction that this caused. So if you're looking for longs right there, but if you're not aware of the monthly time frame, well, you take a loss, right? And then of course you have to find out why you took the loss. And there is the reason. And then look at what the market does. It breaks structure here, right? And it creates that forwardly bearish imbalance, and there is a short. Pulls back, short. Oh, another one. There is another short. Now, the thing with AU is that its timing is very tricky. It can kind of work a lot of times during Asia, and other times it works during New York, right? But two very nice shorts here, right? After the confirmation, tapping into the monthly, breaking structure, right? And then, of course, targeting the liquidity, which it stopped very close to it. Now, back to, again, so right now this has already passed. Back to what is happening right now, and I can immediately say nothing. So do you see any forward imbalances here? No. Do you see any break of structure here? No. Do I see any levels? No. So let me check out the daily time frame. Do we have any imbalances on the daily? No bearish, no bullish. So this one on the bullish side is already broken. So see, do you actually have any bias here? Well, I don't, right? You can, of course, look at the market in numerous ways. You can say, all right now we're in discount, so I'm going to go higher towards that monthly. You can say, hey, no, the market is going to push to the weekly, but we don't know why, because the market doesn't give us any levels and imbalances and structural points to work with. Okay, so in this case, guys, I'm not going to draw anything because I literally have absolutely no idea how this one is going to open and what it's going to do. All right, because it can do 1,000 things. It can start going higher with imbalances to go along. It can consolidate and do nothing. It can start going lower with an imbalance. Then we can target the weekly. It can take the liquidity, tap into the weekly, and then, of course, start going higher. It's so many things that could happen. So, of course, in this one, we got to flow with the market. We got to wait for Monday, Tuesday to open, see where the market starts guiding us, and then we're going to decide. Now, of course, important liquidity point is this low. And of course, we have too many lows right there, this low. And then, of course, after that, this one is going to get taken. And then, of course, afterward is the weekly. So if we start having the bearish order flow, I would start targeting the weekly and the liquidity. But if we start getting some bullishness, then, of course, you target the opposing side of the liquidity. It's that simple. Just wait for the market to guide you where it wants to go. Then you know how to identify liquidity levels, which is absolutely simple. And then, of course, you flow with the markets. So that's AU. All right, next is NU. So overall bearish candle, but let us drop to the forward time frame, see what happened. So if you watch my analysis on NU, I told you that this looks like a very good trade, right? This is, I said, a trade that you can absolutely take on a Monday. Forward break of structure from a weekly imbalance with forward bullish order flow here, tapped in, Monday opened, boom. Okay, now, of course, I have no idea how exact these lines are going to develop, but again, you can see it pushed up, it pulled back. Now it didn't pull back here, but it pulled back here, right? And then it still ended up going higher, all right? But of course, it didn't end up taking the last liquidity. So this is why, again, you should always be targeting one by one, right? Don't say, all right, from weekly to weekly. No, target, this is called, again, reaction areas. I teach this in my private course where you know exactly what to target so you don't get stuck up like this, just for example 6 pips away from your take profit, and the market pretty much takes you out. So again, you can see this was a successful forecast according to me, right? And then of course we take out that liquidity, and then again, if you're just flowing with the markets, you're like, okay, so let me see if I can go long from here. The market tried, it failed, right? And then it started printing bearish imbalances. So guess what? It's time for shorts, flowing with the markets, right? Followly bearish here, very similar to AU. Followly bearish here as well, tapped in, following through. And right now what we're taking excuse me, as liquidity is pretty much where the market kind of started giving us that long setup. All right, so that weekly imbalance right now, back to the weekly, I would still keep it because we have candle 1 here, and then right now candle 2 is sweeping below the candle 1. The daily time frame, oh, this is important, guys, right? So this is why I should be careful to always go back to the major time frames as well. We have a daily bearish imbalance here. So this one is very 50-50. It's kind of still looking like longs from the weekly, but I also have this as a bearish sign, making a lower high, lower low. Daily bearish imbalance. And then on the following time from here, you can see it's also a little bit chopped up. There is an extremely small imbalance, but I don't really count these small ones. So again, guys, here, a lot of things could happen. So we can still go long from that weekly imbalance, but in order for me to go long, I will need to see the daily tap, react, break, and really show me that it wants to go higher. And then, of course, we start targeting the liquidity points. Now, for the short, it's going to be very easy. Tap into the daily, give me the bearish order flow, right? Pull back, and then attack the liquidity. So these are going to be my 2 scenarios, okay? Because we're either going to go long with the power of that weekly and the sweep of that previous weekly low, okay? And then the market is going to give us bullish order flow and start targeting the highs. Or the market is going to respond from that daily, hold from it, print bearish order flow, and then we target this liquidity, which is going to be the low-hanging fruit. All right, so that's NZUSD. Looks pretty good. Let's see which side is going to take on. All right, let's take a look at gold. Now, gold is one of these instruments that is very hard to forecast on the higher time frame zones because it's very sentiment driven. It's like the indices, the index futures, right? Very sentiment driven, very fast, very volatile, and it really depends on like what is happening right now. So here we were tapping into these weekly imbalances, but let's of course see my forecast. And you can see here, I also didn't have a forecast. So I had too many levels here, weekly bullish, liquidity down there, liquidity up here, which Monday actually ended up taking, okay? And then a daily bearish imbalance, which absolutely got destroyed, okay? So here, if I again, for example, go to where the market ended, which is right here, right? What can I say, right? It can go down to the weekly, right? It can go up to the daily, and then if the daily fails, it can go higher. This is how I would potentially analyze that market, right? Now, of course, I already saw what happened, but we can see, right, it opened, and the first thing that it did, it gave us the long kind of sentiment, forwardly bullish imbalance, right? Pops up again, forwardly bullish. Pops up again, right, forwardly bullish. So what you should have done on gold this week, longing it, right? Because it literally showed you after the open, right, bullish moves and bullish momentum. Now, towards the end of the week, it kind of got a little bit tricky here, right? We didn't come in all the way to reach that high. We also didn't even tap into the reaction area, but suddenly we kind of had this forwardly bearish here, and then it chop liquidation here. I think that was we had some sort of news here on Thursday from Trump as well. Becoming a little bit positive, right, for the stock market and for the dollar. And then we see, for example, gold depreciate a little bit. This is why it's very important to be monitoring these kind of macroeconomic events. And then we started printing a little bit of a bearish order flow here. And right now we finish again a little bit 50-50. Like, this is how gold usually goes. Like, gold is really important. Like, I'm currently, we as a community, in my Fanatic community, the private one, we're working kind of on really building a strategy very suitable for gold, because this one works amazing on the lower time frames. If you're like stuck on a higher time frames and you're like trying to forecast bigger moves, you're really missing that on an asset like this. It's the lower time frames that are super important, because in this case I could have said, all right, I'm bullish on my higher time frames, right? I have, for example, I don't know, like, yeah, these daily imbalances here that I'm gonna have to definitely draw up, right, because they are still relevant, right? I'm gonna go long, right? But look at what is happening on the FOIC, which is a lower time frame. So shouldn't the daily be more important? No. right? You can see there are assets like this that really work amazing on the lower time frames, and there are assets that work amazing on the higher time frames, right? Usually the Forex currencies, they work amazing on the higher time frames, while for example commodities like gold, oil, and even indices, right, they work on the lower time frame. So currently all of this is taken, all these volatile zones are gone. What do we have? We have a daily bullish that the market is tapping in. We came in with a lot of bearish sentiment. Do we have any bullish zones? No. Do we have any bearish zones? No, they're taken. Okay, so do we have something? We don't, right? And this is where, of course, guys, you really have to be patient, right? And not try too hard right now to figure out where the market is going to go next, because you literally, like, you really have to accept it right now. You don't know. You just don't know, right? A lot of you are saying, I know where gold is going to go next, and you're going to give us a round number like, all right, it's going to go to 34, 35, right? Sure, it could do that, but you still don't know. And what if it goes first to 31.80 here, and then it goes to that level? Then are you going to be right? Well, you kind of are eventually right, but it doesn't matter, because if you try to long it from here towards your level, you failed. Okay, so again, like, so many things can happen here, and what I would just advise you to do here is wait for Monday to pass, wait to see where the volatility time frame is going to start guiding you, and then of course identify all of your liquidity points, because again, like, too many things can happen. If you start expanding higher, all right, with volatile imbalances, then of course we target the highs. If we start expanding lower, right, breaking structure here, oh, what did I do? Breaking structure below that low. And why is breaking structure below that low important? Because that is going to invalidate that daily imbalance, right? Because we're currently reacting from it. So if you break below it, then this is going to expose, for example, liquidity levels like this. Okay, and then we're going to try to, for example, take a short of a break and retest of that low. All right, so here I'm going to give you again two scenarios, a bullish and a bearish one, and I usually give two or three when I again don't know what's going to happen. Okay, so that's gold. So let's see how it plays out, and let me know in the comments, right? That's a tricky question. Where do you think gold is going to go next? Right? I sometimes ask this and I hear like, it's gonna go here. Wrong. Right? All right, let's check out the JPYs, starting with UJ, straight on the volatile time frame to reverse engineer what happened this week. All right, that one's not bad. Again, here, a lot of time frames. Daily bullish, weekly bearish, hourly bearish, and I even had a 1 hourly zone here bullish, right? So which one do we follow? Okay. Now, of course, again, you can see when it's uncertain, I give you two scenarios. The market either breaks above that volatile zone and give us the longs, or the market either holds from that volatile zone and take us into the daily. Simple. Okay, so if you just waited for the market to open and it showed you that it actually wants to go lower, then your task is to find the trade towards that daily. And then when the daily taps, right? So there we go. This forecast fulfilled, right? And then when the daily taps, your next question is, okay, is the market going to go up from the daily, or is it going to break the daily and start attacking, for example, liquidity levels to the left? Okay, and it actually ended up breaking the daily, taking the liquidity, and then from there, let's appreciate the very volatile week on USD/JPY. Honestly, we made a very nice move lower, and then we reversed and we made a super big move higher, ending up taking the liquidity, right? So imagine, guys, last week when the market was here, I could have told you the market's gonna go here to 146. Okay, and if the market went right now to 146, was I right? Well, if I tried to long it from here, I was absolutely wrong, because the market moved like 200 pips away from me before it reached the target, okay? So this is why it's really important to just flow with the market, have your levels, but again, the full focus is to be flowing, all right? Because then here you could have said, all right, I'm bearish, but look at what is happening. From the bottom here, bullish imbalances start forming, we tap into that bearish one, we react, we break it, we pull back again higher low, and then we expand, and then pretty much this was a very high probability long. I had a couple of members of my community take that long right there. Absolutely beautiful, taking the liquidity. Then should you be looking to take that long? Well, not anymore, because again, you have to be aware where the market is positioned right now on the weekly time frame, making a weekly high and making the pullback on a Friday after taking the objective. Okay, so not a good trade right there. But of course, if I just delete everything that is irrelevant right now, that weekly imbalance, I'm gonna remove it. I mean, we're spending 2 weeks inside. It's no longer relevant. Daily imbalance is too long. So what do we have, however? We have a daily bullish. And this is why I kind of have a feeling that the DXY is also giving me these daily bullish imbalances here. So is the dollar really going to start picking up some steam? The USD/JPY is also giving us some long setups here. What's that imbalance? It's weekly? Yeah, that's the next weekly imbalance. Yeah, we are almost invalidating a new monthly bearish. it's starting to give me a little bit more bullish clues. Okay, so here we have that quality that's invalidated, and at the same time we have this one here. All right, so we have that sandwich situation. All right, so here again, guys, like I can say right now the market's gonna take out that high. Okay, but if it does all of this, right, and then it takes out the high, like again, if you try to long it from here based on, hey, it's gonna take out the high, you're gonna lose. So really have to follow with the market, because again, here a lot of things can happen. We have currently the quality time from a little bit bearish in control. So if it fully invalidates it and prints a bullish one, then I'm immediately gonna go to the high. Okay, but if it taps in, it holds, reacts, right, and then it breaks it, then still that is gonna be one of my entry models that I taught in my private community. And then of course the other one will be to fully hold. So let me draw it to fully hold from that quality, tap us into the daily, okay, and then from the daily, of course, look for the shift towards that liquidity. So here I'm again giving you very one-sided bias. All right, but guess what, the market can just open, drop the daily, and absolutely crush and start attacking the liquidity. Right, so again, flow with the markets, but these are kind of the two scenarios that I see happening potentially with USD/JPY, simply because I see that very recent bullish introduction and I don't want to ignore this, okay? But of course, I always remain in balance and pretty neutral, because if the shorts start kicking in, if the dollar starts depreciating, and if the majors also start climbing, then of course you have to be on the shorts immediately. Okay, so that's USD/JPY. I really like this daily imbalance, so hopefully the market's gonna tap into it and then we can get some longs. So let's see. Let's have a look at the choppy JPY pairs to the quality time frame. So what did EJ did? So I either forecasted that the market's gonna hold from the daily, or I forecasted a full breakdown. Damn, I really got this one to the tick, guys. Come on. So yeah, we literally went to that liquidity. Now, why did I expect such a reversal? Probably because of USD/JPY and because we took out some massively crazy liquidity. And the market pulled back into that daily, but you can see it absolutely ignored it. It didn't even give a reaction, and it just kept flushing and flushing and flushing, right? And here we also had that quality imbalance that ended up holding, all right? And there we had, for example, a short opportunity towards that liquidity. And then when we take that liquidity, right, which is why it's super important for you to be understanding, right, to be having two concepts, right? And I trade two concepts. I trade liquidity and imbalances. Super simple, and it's all you need. I don't need the order blocks. I don't need this. I don't need FIPS. I don't need PD ranges. I don't need anything. I just need to flow with the markets. And these kind of the two concepts that are extremely powerful. Now, since we take that liquidity again, we start aligning bullish. Like, I also use a little bit of structure, right? Pretty much very simple lower highs and lower lows. But overall, we pop up here again. Who takes control? The longs take control. Pull back our high, right? And then right now we have this one that we're tapping in, the quality bullish. And did we form anything bearish? Yeah, we did, but it's already gone. So we already tapped it, and then we absolutely fully reversed. We tapped in, we broke it, and we also have not only that quality bullish, but we also have a daily bullish. So again, I'm gonna ignore that daily bearish because we're currently having a bullish one, and I usually the most recent one always takes the priority. All right, so I can say here the outlook is easy. Pull back into that daily, and then longs towards the highs. Of course, take it one step at a time. Liquidity target number 1, liquidity target number 2. All right, and then of course you can look for the high. So looks like long buy, so I'm gonna keep it here. But again, guys, this is like a very choppy pair, right? So I wouldn't be surprised if it just something happens and it validates that daily and then attacks the liquidity. Okay, so I'm just gonna give this one as a scenario as well, because I really don't trust these pairs. But it looks like a pretty nice long setup on EJ. UJ is also looking nicely for longs. Let's see if they're gonna go long. Here is GBP/JPY from last week, again starting with that quality bearish imbalance, tapping into an order block to the left, and then again we tap into that daily. And then again I had more of a long bias here for the market to tap the daily and again shift, but again did it shift? Okay, this is why it's always, guys, like an entry confirmation or just waiting for the market to prove your POIs are gonna work is so essential. So many of you are just like, hey, the market tapped into my zone, it's gonna go higher. No, this one absolutely didn't. It printed just one bullish candle and then it just continued printing the bearish order flow. All right, so that daily imbalance failed. We came all the way down. We didn't come to the weekly. Yeah, we didn't come to the weekly. And on the daily currently, yeah, I really like these JPY longs, by the way. They are starting to look good. This one took the order block, reacted from it, and then the next target is going to be that high, and then eventually like that major high. But we're having a daily bullish imbalance, and then we're also having a quality bullish. So which one is going to hold? We're also coming in very close to that liquidity level. So when the market is getting so close to the liquidity, what it just ends up doing is just taking it out. All right, so this is what I would expect for the market to do. First thing, maybe on Monday or Tuesday. And then again, after this, what is going to happen? This is, again, guys, way too much outside of my control. It can continue going higher. It can reverse and tap into the daily, right? And then again, reverse, we just don't know, all right? So this is why it's always important to have your zones and liquidity levels and just flow with the market towards where it's pointing you, okay? Because the market is always going to point you towards somewhere. And if you have an understanding of levels and zones, right, you're potentially going to know where it is pointing you towards. So forwardly bullish, I think this one is a pretty good long idea. Now, of course, if this one fails and takes us into the daily, I would love even this one more, because then I'm going to have a better positioning to long the market into the highs. But I do see an overall pattern within the JPYs. They're looking pretty bullish. So I'm going to kind of confirm that I'm looking for longs on the JPYs for this week. So how it's going to play out, again, this is outside of my control, but let's see if we're going to be getting some longs. All right, welcome to the indices part. So I just want to, again, here a little bit of a disclaimer on the indices is that these are instruments that do not amazingly work with the hard time frames. These are super sentiment driven, super very recent bias driven, right? So if you want to be trading the indices, don't go monthly, don't go weekly, although these levels hold incredible importance. What is really important for these instruments is that you understand like the lowest time frames, okay? Because usually kind of hard time frame levels here tend to get disrespected, and then the market kind of ends up in chop. Like, it really depends on the conditions. Like you can see here, I didn't have any bias. Like we had that 4-hourly zone, but the market pulled back. It kind of held from it, but then it pushed lower. Then we again don't have any bearish zones here. But then again it chops, it takes the liquidity, and then we don't even get any bullish zones here. So overall, you can see this week I had a profitable week trading futures, but I am scalping them. Okay, so I have a scalping system on the futures. I still haven't showed it to anyone, right? Even my private community, but you can even trade choppy conditions like this. All right, now let's go to the weekly to do our top down analysis. We are creating a weekly bullish imbalance, which to me is a very good sign for potential longs. Just above us, we have the monthly bearish imbalance. So right now we're kind of stuck between two levels. And again, guys, the very big question is, what is going to get tapped first? Now, are we going to pull back to the weekly and then head for the monthly? Or are we going to pull back to the monthly, react, head for the weekly, and then potentially the reverse, right? Again, we do not know, unfortunately, all right? So again, I have nothing to say right here because again, I even don't do like a morning analysis for my community on the indices because I'm trading them even without too much of a daily bias. Just liquidity levels and just, of course, trading like a 15, 10 minute, 5, 1 minute, right? Targeting some very recent levels because right now I have absolutely nothing to say. There is not a single 4-hourly zone here, right? Absolutely not a single 4-hourly zone. There is one right there, right on Tuesday, and then since then we have absolutely nothing. So I cannot really say anything right now about ES. It took the liquidity, pulls back, and right now it's just in the consolidation. So I have no idea what its next move is, right? But every single day I'm gonna show up in the New York Stock Exchange Open and I'm just gonna flow with the market. Okay, so currently, again, the two important levels are the monthly above us and the weekly below us. So again, like, wait for the market to show you where it wants to drive you to. If it starts bearish, okay, target a weekly. If it starts bullish, target a monthly. Simple. Okay, so let's see. So here's my NASDAQ doodles here. One of the scenarios was to pull back into the 4-hourly and head higher, and then the other one was to pretty much take the liquidity, which is what ended up happening, and then the reversal. So kind of, this liquidity taken, and then the reversal kind of ended up playing out. But on overall, you can see choppy development this week. Now, a very key detail about NASDAQ is that it's already into its monthly bearish imbalance, all right? And here we're also getting a weekly bullish, which is starting to get interesting because, again, Trump came in very positive in one of his speeches. He even said, like, it's time to go out and buy some stocks, which was absolutely amazing. Had a profitable day on that day simply because of that news, right? Just long the market, right? But the weekly bullish below us, and currently we are ending up the week by taking liquidity. So when the market takes liquidity, either it's going to pull back to rebalance something or it's going to take liquidity. So I would definitely see this low being taken. Some shorter term bearishness to tap into that low and to also tap us into the weekly imbalance, and then from there to give us the longs. This to me will be a very nice setup, because that is also going to make a little bit of a pullback, right, for buyers to get a better position and then potentially go higher. And then of course, if I drop to the quality time frame, nothing, guys, right? Absolutely nothing. No zones. Swept the liquidity here. Then it was a choppy day. I took a small loss on a Friday. I shouldn't really have traded, but very choppy here, right? So again, like, wait for the market to show you where it wants to guide you. Is it gonna start getting us shorts, tap into the weekly, then reverse? Is it gonna start getting us higher, tap into the liquidity, and then of course see what we're gonna do next? So nothing too much on the hard time frames right now to extract on Nasdaq. So again, wait for it for Monday to kind of show you where it wants to go, and then again you take it from there. Well, YM, US 30, again, tapping is into that weekly here, uptrend, then it reversed lower. Not bad. Like, I mean, this one was a little bit more trending than the rest. But again, you can see here, I didn't really have any sort of markups as well. So if we have a look at what is happening right now, let's of course drop to the weekly time frame where we are tapping into that weekly. But at the same time, I really like that all the indices are making a weekly bullish imbalance. All right, it's not the best imbalance, but still it is something proving that some longs are in control. And how we're ending up the week as well is sweeping that liquidity, okay? And we don't really have anything to pull back into apart from that weekly zone. So again, like, an overall setup that I would really love for the indices is to get that short-term bearishness, like Monday, Tuesday, Wednesday, to sell off, and then Trump to come in and pump the market on a Thursday. Like, that would be awesome. All right. So again, let's see. All right, is the market gonna start picking up from here with bullish order flow? You long it. This is gonna start picking with bearish. You target the weekly, and then from the weekly, you really have to flow to see, right, what is gonna happen. All right, it can crash down, it can go up. Again, these indices, as I told you, there are instruments that are very driven by sentiment. If Trump comes in and says something, it's gonna get driven by that. Okay, right now confidence is starting to get resumed in the stock market, so we're starting to get a little bit more bullish, but there's still rumors that we are again retesting that level below the EMAs, below everything. Still sellers are in control, so again we are about to see, but I don't care because I kind of trade indices without daily bias. I just show up for the day and like try to trade for around 2 to 3 hours. So again, that to me doesn't matter as much, but I always love to be aware where we are on the hard time frame. So that's why I am, again, a very clear kind of overall bias for them is to just wait to see where they're going to drive us. We have our levels, and then we're going to act accordingly. All right, so DAX actually ended up playing out how I expected, right? Forward imbalance, taps in, fulfills the first liquidity target, all right? And then the second one was all-time highs, which we eventually ended up taking out as well. So absolutely crazy. This one is already at all-time highs while the US indices are still slacking, right? I don't trade DAX, by the way, but looks pretty nice. Weekly imbalances right now taking all-time highs. So I would say right now, I would definitely love to see some sort of a pullback on that one. If we drop to the daily time frame, you can see we don't really have anything on the daily. We had a lovely zone on the daily right there, though, right? Tapped it in, right? This is why your forward failed here. This is why your forward didn't hold, because the market wanted to pull back into the daily. And then from here, it kind of ended up in a little bit of a chop, but very slowly grinded its way towards all-time highs. Currently, there is nothing on the forward to go long, nothing on the daily to go long. So I would really want to see a weekly pullback, because again, when we take all-time highs, the market can either just continue pushing a little bit higher, but then I would still love to see a zone to push higher, or it can start pulling back to the weekly and then of course resume the uptrend. So that would be DAX. Again, not an instrument that I trade. I don't scalp it. I don't day trade it as well, but I still kind of keep looking at it. I don't know if I should, but there it is. That's DAX, just based on the hard time frames. These are kind of the two situations that I would expect. All right, and finally, let's throw a little bit of a recap. Now, of course, the DXY is a little bit 50-50 to me still. Like, again, as I explained, it's showing us some very nice bullish order flow. We're having daily bullish imbalances created, but I really want to see it follow through, because I'm kind of bullish on the DXY, but then I'm also a little bit bullish on EU and GEO. Like, they're tapping into weekly imbalances, and then if they start getting the bullish order flow, then that would mean that the DXY is going to start reversing. So pretty much, again, EU weekly imbalances, I'm looking to see it pick up. GU was absolutely strong from the weekly imbalance. Like, look at that beautiful reaction here. Like, EU was like, not ready, but GU was like, boom. All right, so this kind of EU and GU long bias, and also even Aussie dollar. Now, Aussie dollar and the NZD dollar are not so much long bias, but they're also tapping into a weekly zone. However, NZD/USD has a daily bearish. Aussie dollar doesn't have anything. So these two are right now a little bit 50-50. They were really good last week, but right now not as much. But EU and GU kind of giving me a little bit of a long signal. So is the DXY really going to go long? Well, we're about to see. Gold is also a little bit right now closing the week in the middle, right? It has a weekly below us here in liquidity. It's tapping into a daily, but it's not giving us a lot of bullish signs here. It's so far been making lower highs and lower lows, so the buyers still haven't stepped in. So I really want to see who is going to step in, and then of course flow with the markets. The JPYs, by the way, are all giving some long setups. Daily imbalances here, a very nice bullish trend on UJ. Let's see how it's going to play out. EJ as well, hourly bullish and daily bullish with clear liquidity targets, and even GJ, very clear liquidity targets, very close to them with a hourly and daily zone. So again, how it's going to play out, we're about to see. Meanwhile, US indices, they close very indecisive, right? So again, I kind of gave you an overall 2 scenarios. ES, either the weekly first and then the monthly, or the monthly first and then a pullback maybe. NQ is already into the monthly, taking liquidity. It has a weekly below, right? So that weekly imbalance on all the indices is a very interesting target to get some initial selling pressure to pull us back into that weekend, and then maybe from there new buyers can resume, and then we can have a very nice uptrend, like something like this. Like a lot of times the market does something like that, right, to scare out a lot of the buyers, to take a lot of liquidity, and then it resumes in a very nice uptrend. So I would love if it does something like this into the weekly zones. And then of course DAX, it's already at all-time highs, so I would be looking for either a breakout above with new zones or a pullback into the weekly. So that's the outlook for this week, guys. Let me know if you kind of like this new format by reverse engineering and actually dropping to see what happened on the 40 time frame and how my analysis played out. Let me know if you like it. Let me know what is your watch list for the week ahead. I hope you had a profitable week, and I'm gonna catch up with you on the next outlook.